phase of a correction which is happening into the IT stocks, I think should be taken as an opportunity to try and maybe add, accumulate further, because many of these stocks have managed to come back to their strong breakout points. We were looking at large cap names some time back, and the likes of Infosys, TCS, Wipro, etc. These stocks were fallen had fallen below their long-term moving averages, and they were trading by a margin of almost 8% to 10% lower than their long-term moving averages. Now, in this last 2 months of recovery for the IT stocks and the IT index, these stocks have crossed above their long-term moving averages and are trading with a positive margin over there on the higher side. So we are looking at a point where the Nifty IT index has definitely gained strength. There has been good turnarounds for many of the IT stocks. The only concern over here is from the mid-cap IT names, because names like Coforge, for example, that's a stock which is now starting to look a little bit more vulnerable on the short-term basis. It's corrected almost 8 to 10% in the last 1 to 2 weeks. Maybe that could be a stock which one has to be a little bit cautious on. But the large cap IT space, I still believe, offers a good opportunity.
Okay, so that's on the entire IT space. We also have Deven Choksey, who's joining us on the show, Managing Director at DR Choksey FinServ. Deven, hi, good afternoon, and thanks for your time. Before we get your view on markets, while we're talking about the IT space, what is your view over here? Are you getting a little constructive on this space, given that we've seen some optimism before seeing a slowdown once again?
Good afternoon, Say. Well, I believe that the overall environment is becoming more conducive for the Indian IT companies. Two or three counts. On one side, the clients of these companies are getting aggressively into the AI mode of working, and as a result of which, I think the solution providers like Indian IT companies, they are basically now once again being attracting larger amount of inquiries, at the same time converting into the order inflows. And the contracts that they are signing up for a longer period of time. So which is another good point which can be observed in TCS, Infosys kind of companies from their order book info that they have. On the other side, I think for the supplying of the projects, the AI is being used extensively in their environment as well, which is basically cutting down on the time to go to market or time to deliver the solution to the end customer, which is again, I think, helping them on the other side. Last but not the least, though it may be a temporary for a 3 month, 6 month period, the currency depreciation is acting as a tailwind for some of the IT companies. So, in my viewpoint, I think this December ended quarter, by and large, I think has gone well for most of the Indian IT companies as I see it. Maybe we will wait for confirmation on the guidance. I guess, I think, suppose if the higher single digit to the mid double digit kind of a growth, if something is possible, then I would like to hear from many of the companies' cases, or rather, I think, conference calls, earning calls in coming quarter. So obviously, I think the outlook remains positive. We are careful. We believe that the valuation-wise, these companies are not expensive. So that way, I think the downside risk is also to a greater extent controlled and managed in the current situation.
Okay, so that's an IT and a good quarter. The one that's underway right now, it's expected to turn out good for IT stocks. That's what Devan believes. But Devan, talk to us about if the earnings growth could be positive for this quarter across the market. Is that something that we're penciling in? Could quarter three look better than quarter two?
Certainly, I think the again in the quarter three, the larger amount of thrust has come also because of the fact that the festive season, October to December period, is basically working well for the consumption theme which the country as a whole is experiencing. On the other side, with higher amount of disposable surplus, both due to the tax exemption limit increase in direct tax and also I think GST rate fall, I think is giving the larger amount of thrust for consumption. And last but not the least, particularly in the discretionary consumption, the rate of interest, I think, which are remaining low, is again helping some of the companies in the real estate in particular, and also in the consumer financing, in auto and other verticals. I believe that I think these companies are relatively getting more and equipped to, I think, deliver a larger amount of growth. So banking and NBFC sector could deliver better growth. Some of the FMCG companies could deliver relatively better growth. Auto ancillaries could deliver relatively better growth. So the space which is connected with consumption, definitely I think we see the better quarter in the third quarter in the current financial year.
That's the take on what the market could pan out to be once the earnings season kickstart in about 15 to 20 days from now. So that's going to be an important trigger to watch out for. Kunal, I'm just looking at the